U.S. stocks marched upward Thursday, with tech stocks leading the way. At the same time, fresh data pointed to a gradual softening of labor market conditions. Applications for unemployment benefits rose by 228,000 for the week ended April 1st. The prior week was revised up 246,000. The gradual slowing in the labor market may be encouraging to some investors, as the hope is for the Fed to be somewhat dovish. Currently, the chances of a rate hike in May remained at 47% after having been as high as 70% earlier in the week. In my opinion, another rate hike is in the cards. How much higher the federal funds rate will need to go from here is the real question. But after looking at bonds, I think we are nearly there. If we go much higher, more things are going to break, and the last thing we need is another bank to lay an egg. Today we're going to take a look at two quick charts, beginning here with the iShares Russell 2000 ETF, and this is a pretty good proxy for the Russell 2000, and the symbol is IWM. And the close on Thursday was 173.89. And as you can see here, we have a relatively decent move on up here. We had the 2020 plunge to that level here, and then of course we topped out. It took about a year to top out before it came on down. Now it's taking about a year to bottom and base before we head on up. As you can see though, that looks like a fairly decent bottoming and basing. Moving down into the oscillators, the volume's not telling you much, but here the MAC does. Now, the Russell 2000 has a bit of a problem in actually the fast line moving on up, and that's probably because smaller companies that make up the Russell 2000 are having issues with financing, and that as a result of the banking sector. But soon enough, this will bottom and base, and that fast line will head on up and through the slow line, which is in red, and we're close to zero. So I say we have a few more months to go, but it is looking decent even with the troubles that it's had here in the recent months. Moving on down, you can see that improvement in the histogram. Definitely bottom base, headed on up, have a bit of trepidation here, but that's not going to last too long. Again, a few months into perhaps the next quarter for sure. Now, price rate of change, you can see here, we've bottomed and based. Nice sawtoothing going sideways, and finally the fast line crossing up and over the slow line, and it's going to head on up. You can see the strength here building in the RSI from this point, moving on up. Things are improving. It's crossed through that 50 or midline, came back down here with a sawtooth, but we're going to go right back on up. How do I know? Well, take a look at the stochastics. That looks improved with the fast line above the slow line, bottoming and basing. It's going to head up. And how do I know? Well, the Williams already headed on up above that mid or 50 line. It's sawtooth back down to this point here, but it is going to head up. You can definitely see the improvement over this last year. So things are looking up. You still do have time if you're looking at some of the smaller stocks that maybe make up the Russell 2000, but I would say perhaps averaging in is a very smart move. All right, let's compare this chart here with the S&P chart. And we're now taking a look at the 20-year monthly chart on the spiders, the SPY, and the close on Thursday again 409.19. The difference between the SPY, the S&P 500, and the Russell 2000 is that this bottom and basing in the S&P is a little shorter with definite improvement moving on up. So I think once again the Russell 2000, the smaller companies, are suffering a bit more from the banking crisis. Moving on down here, here in the volume, again, not much change. But here in the MAC, you can see that the MAC is in much better condition for the S&P 500 than it is for the Russell 2000. Definite bottom basing here above zero. Looks like it's closing in. Still some trepidation. It's having some hesitation in moving on up, but again, I think that's going to be solved here in a few months, perhaps into the next quarter. We see in the histogram definite bottom basing, definite improvement on up. Now, into the price rate of change, pretty much the same thing, as well as in the RSI, improvement. The stochastics, more improvement, and then the Williams here in the S&P 500 is racing on up. It wants to get into that overbought territory, say between that -20 and 0, and it's going to get there relatively soon. So things across the board are improving, whether you're in a small stock or a blue chip or even the NASDAQ. The markets are improving. Don't listen to the crash bros. It's time to take a look at your stocks, take a look at the charts on those stocks, conduct your due diligence in the fundamentals, and average in. Place those bets, because in a few years, you're going to look like a genius. Things are improving. Don't be afraid to average in. And for today, that's ChewDog Charts. Thank you.